As expected, the Fed raised interest rates 25 basis points today, or 0.25% if you prefer. We're going to discuss that. Jerome Powell's presser, some hot earnings from Meta that is sending that stock rocketing up in the after hours. Before we dive into it, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are not financial advisors. We're a few guys who love following the markets, but please do your own research before making any buys or sells. Kev, we are seeing a ho-hum day in the stock markets for the most part. The Dow did extend its winning streak to, I believe, 13 consecutive sessions, the longest such streak since 1987, before you were born, young man. So that is absolutely insane. 2 years after I was born, because I'm old like that. But that's absolutely crazy. Meanwhile, we have the interest rate hike that we were expecting. We'll discuss Jerome Powell's presser. I watched every little bit of it. It was, it wasn't anything too groundbreaking, in my opinion. We'll discuss what kind of moved markets. But as you get back into it for the day, what is catching your eye in the markets as we wrap up Hump Day here on Wednesday?
Hump Day, yeah. It's I think the most important thing is obviously Meta. I saw that it started shooting post market. It's currently at like 4% up, 310. So it's broke 300. It's not like it hasn't done that before, but definitely it's really interesting to see that we created another gap once we open tomorrow. Man, it's these tech companies. They keep beating expectations, right? We saw it yesterday with Microsoft. We saw it with Alphabet. Again, my main thing, I really want to see the numbers, and I'll probably go into it after the show to see how they are doing in terms of profitability from quarter to quarter. But this market's going to buy it, obviously. We saw the NASDAQ pull back a little bit today, but for the most part, it closed down 62. But it's Meta's pretty much stealing the show for me. I didn't get a chance to see too much of the FOMC. 25 basis points, we already priced that in. So really interesting to see how the markets are going to react going into tomorrow once they open.
Yeah, I think tomorrow we get GDP data. There's really nothing else too interesting there. But then Friday is the big day, and I think we can see a lot of movement on Friday. So tomorrow we get that GDP number, we get initial jobless claims, we get some other, info around durable goods, pending home sales, some inventories, things like that. So not anything too gigantic. We're expected to see 2% GDP for Q2 as the initial reading. We will see there. Honestly, I think if we saw under that, the markets would kind of respond favorably, because that would probably give the Fed a little bit more room to ease off a bit if we see growth starting to slow. That's just my opinion on that one. But yeah, Friday we have personal income, personal spending, PCE, core PCE. That is going to be what really moves things. How much of the expectation is priced in at this point? The market and some people I've talked to are expecting 4.2% for the year-over-year core. That would be a big move down from 4.6. That'd be the lowest we've seen in a long, long time. If it comes in higher than that, though, could markets absolutely get shit on? And I'm not too sure about that. So something to think about there. Let's talk about Jay Powell's presser a bit. I listened to the whole thing. As always, just riveting stuff. Absolutely incredible. Absolutely incredible. It was a lot of the same old. He started. It's all about data dependency right now. That's what he kept going over and over and over about. What are they going to be looking at moving forward? And supply and demand dynamics. Upcoming data is going to determine their actions. He brought up multiple times that they have, before the next meeting, they haven't made any sort of decision on what they're going to do in September. He reiterated that ad nauseum, because they have multiple employment reports. They have multiple CPI prints. They have this PCE on Friday. They have plenty of other data points to look at before they can make a decision, before they need to make a decision on if the next step is going to be to pause or going to be to hike again. Right now, it is priced in that they are going to be pausing they're going to be skipping again in September. I'm not too sure if the markets are really giving as much credence to the idea that they could do another 25 basis points. Because right now we're seeing about a 70% chance between now and the end of the year that they don't raise again. the thing that sent the markets down when he was talking, and I had him on one tab and I had the charts open on another. And as soon as he discussed the idea that they weren't going to be cutting this year, the markets immediately took a leg down. Like everything shot up when he started talking because he sounded fairly dovish. And then he seemed to make it pretty damn clear that it is not even remotely on the table that they're going to cut this year. And the markets had begun to price that in. Like there was, from the data I was looking at, about an 18% probability that they were going to cut in December, which always, to anyone who's been paying attention, that's asinine. Like I really don't get where, like I would love to know who is making these probabilities and where this data is coming from. Because if you'd been paying attention to anything Powell's been saying for the last 15 months, like he's very straightforward with a lot of this stuff. He doesn't really like to surprise the markets. And they've been saying for a long time, like in the most recent, in the beige book, in the minutes from the last meeting, that they were expecting to have to keep rates elevated into 2024. So I really don't know why the markets were like, you know what, we're just going to start pricing in a cut. Like that's probably going to happen. That seems logical. So that was my takeaway there. Him kind of just shaking his, a lot of the questions, like you could tell he's just getting tired of answering the same shit over and over and over again. And they're trying to get him to like spill the beans on stuff, but I don't really know if there's a whole lot of beans to be spilled right now, because once again, it's all about data dependency. That is the only thing that matters. And I think a lot of these journalists are just grasping at straws, trying to pull something out of them that just isn't there.
Yeah. Man, at some point, I think we are gotten to the point where whatever Jerome Powell says, even if the market's been pretty much pricing in everything, even if they realize, oh no, we're wrong in the forecast, we're going to change it now. They've just been pricing in every single thing, and we kind of anticipate that it's going to be a 25 basis point hike. You can kind of take this guy for what he says at word, at least from what we've seen from pressers prior. He doesn't like to spook the market. Some back in the day he did when he was throwing 75s and 50s and people were questioning which one it would be. But lately it's been pretty much exactly what he says, right? So part of me is just like, does the FOMC even fucking matter anymore? And I mean this in like the most simplest way in terms of how market psychology is going to work. Because if we know what's going to happen, this guy's already telling us, is it just hoping that nothing breaks to that point so that the markets don't get spooked? Because something will break at some point. And the question is, are rates going to be elevated to the point where people are going to be like, all right, this is going to just be one, vicious cycle of just everything spiraling out of control. In terms of what we saw today, the markets, how they're reacting, sure, it dropped a little bit, based off of what he said, not cutting anything till 2025 or getting to 2% until 2025. I don't know. It seems like we kind of already anticipate this. We're kind of just like in this lull period where we'll take some profit when we can. We'll try and push the market up. But for the most part, I don't know if this is just if this even matters anymore. I think PCE data still really matters, and there's other metrics for it. But FOMC days, I think they're not as fun as they used to be. And I mean that in the the most chaotic way. They used to be a lot more fun back in September of last year. I don't see that anymore. I think this is like, I know we make a big deal of it on the show, but it's like, fuck this. It's been priced in forever. Everything's been priced in.
Yeah, there's not a ton of surprises these days.
No.
One area he did sound dovish on was the idea that they are reaching a point where they'll continue to see downward pressure on inflation due to the interest rate hikes. I think this week's PCE could go a long way in showing that as well. I think the next CPI print could go a long way in that. Someone did bring up the amount of money that people had to spend on Taylor Swift tickets and tickets to go see the Barbie movie as an indication that the consumer is still strong. I think on the Taylor Swift side, that's just people overpaying and dipping way into their savings for that, but that remains to be seen there. So it's just another one of those like, oh my God, we're at this point where we are still talking about Taylor Swift and the Barbie movie when it comes to the FOMC. And that to me was hilarious. Like Jerome Powell, like the look he was like, oh my God, like it was just so great. But hey, listen, Swiftonomics, baby. It is stronger than Bidenomics, and there's no way to argue that, in my opinion. And
the best part about, what I like about Swiftonomics and Reaganomics? Neither of them were named by Taylor Swift or Reagan. We gave them that name. Bidenomics that's a self-named ideology. I don't subscribe to that.
Don't me either. No
But
false idols. Okay.
I do want to say
Anything else you want to talk about? Yeah, go ahead.
Yeah. So again, the thing with obviously Barbie too, it's like, cinema's a pretty cheap, expense for a lot of people. For the most part, they're able to just go and just, buy tickets. We saw that back in like the Great Depression era. That was the one industry that really did thrive because, it was just cheap entertainment that you can bring for your family. Live entertainment's obviously way more expensive, but for the most part, cinema does a pretty good job. I went and saw Oppenheimer last night, and I'm not gonna trail off too much, but AMC, what a shithole. I'm sorry. Like the fact that people are like so bullish on this, I'm like, I'm surprised these are still around. Like there was 3 urinals broken, the chair, my armrest had gum on it. I don't know how these are. It's just if it wasn't for Barbie Oppenheimer right now, I don't know, man. I don't think they'd be doing
It's
too
called
well.
Barbenheimer.
Barbenheimer, yeah, it's fucking it's wild. But yeah, obviously it's just a great time for AMC in theaters right now, right? You got 2 big grossing films that people are really excited about. It's the first time we've actually seen that in a long time. So I'm not surprised that we're starting to see some consumer resilience when it comes to that. People are excited. Same thing with Taylor Swift. Taylor Swift's coming to town. Fuck it, let's ball out. But if there's something that's going to get people excited, they're willing to spend money on it. The question is this going to be sustainable for everything else moving forward? So that was just one thing I just took note of.
Okay. Anything else you want to discuss on the FOMC side before we start talking about Meta?
Nah, he says that they don't forecast a recession, but I think otherwise. So that's all I'll leave. I have to watch the entire thing if I want to comment on that. Maybe tomorrow.
Okay. Let's get into Meta. So they reported earnings right after the close of markets today. Saw second quarter revenue of $32 billion, up 11% year over year. They're seeing an increase in daily and monthly active users. That's obviously good for them. One number that I'm reading here that sticks out, 98.4% of their revenue comes from advertising. That is huge, right? So my question with Meta becomes, if we do start to see an economic downturn, if we see people spending less, clicking less ads, advertisers, having to slash those budgets, not advertise as much to as wide of a range of people.
You're asking the right question.
Clearly, Meta is going to take a hit.
Yeah, exactly.
Meta is clearly going to take a hit if we start to see these, the lagging effects of these interest hikes, are not doing the work that we think they are. If inflation is sticky, then do we really think? Because when I owned a business before, I advertised on Meta, and you set a certain budget, and I'm not saying that these companies would stop advertising altogether, but maybe they trim that marketing budget if they don't stop completely. So I think that is definitely something to keep an eye on when it comes to whether or not you're trading this Meta stock price, because if we see things start to slide back, if we see consumers getting into tighter spots and they're not able to spend as much, which these higher amounts of debt that people are holding on to, higher mortgage rates, that was something that was brought up during the presser as well with Powell. But it definitely has to give you pause if you are bullish on Meta, I have to think, because that is a huge, huge percentage. Like if revenue from advertising ever starts to go back, like goes down on a year over year basis, watch out, because that stock price is going to get fucked.
I mean, I think that's the killer, right? Credit. That's the thing that, the only thing I think this entire market has not priced in is a massive credit event. And yeah, Meta would not be, would not go unscathed if that happens. Consumers, I mean, what was 98% of all revenue came from ads? That's fucking wild, man.
98.4. I don't know where the other 1.6 is coming from. Maybe
I bought
it's Oculus headsets.
I was just about to say I bought an Oculus. You're welcome, Zuck. But yeah, fucking that's insane. That's extremely wild to have a company that's main profitability is off that, and you're expecting.
I mean, that's Google as well, right? That's Alphabet. Like they add revenue from Google ads and YouTube ads is where they get the majority of their earnings.
100%. And the question is, like you said, are consumers going to be, our company is going to be willing to use ads as much if consumers aren't buying, right? It's a waste almost at some point if you know that consumers have ran out of money or they've absolutely just, they're up to the tits in credit debt or just debt in general. So we'll see how that plays out. But for the most part, yeah, knowing what we know, it doesn't seem like a great outlook if we are bullish on certain stocks, especially ones like Meta that are making all their money, all their revenue from those streams. Mr. House,
Yeah,
thanks for being here.
absolutely. Mr. House, good to see you. Yeah. And, if we look at it, businesses are always going to advertise. That's just how it works, right?
But they can roll back.
Where are they more likely to cut back on? Is it Instagram and Facebook ads, or is it Google ads? And I would venture a guess that they're more likely to back out and to spend less on Facebook and Instagram ads than they are Google ones. Now, granted, I could be wrong. Like I'm talking out loud here, because with Facebook, I believe you're better able to target who you're advertising to. So you can target based better, with Google, you can target to the area you want to. With Facebook, though, you can target to people with certain interests in certain age groups. So it may be a situation where people actually cut back more on Google ads. Like, yes, Google is bigger, but the improved targeting of ads on Meta and continuing to look at the amount of daily and monthly users they have, which is huge, could definitely lead to people wanting to stay on that platform with a higher percentage of their advertising budget.
They can also cut back on both too. I can see a point where they just, reallocate a little bit less to each one and, try and just save some money in those areas and still get pretty much the essentials of who they need to be using their business or buying their products, right? Just the core demographics. So I could definitely see a place where just people start cutting back, businesses in general. And obviously, if we're talking Bidenomics from the in and out, up and down, that would eventually hurt Meta at some point.
Yeah, absolutely. It's, man, the market, like how is every time I say how much higher can these markets go, they just keep going. And at some point, something's got to give. Like we're seeing Bitcoin have a nice little run up today, like you had talked about. ETH is at 1882, continuing to move up there.
Good trade yesterday.
I have my point where I'm ready to exit that trade, but we're not quite there yet. And I'm looking at the charts, and on the daily, we're still oversold. So I think that there could be some room there, but I'm not going to get greedy with this one. Okay, I swear to God, I'm not going to get greedy with this. I know where I want to take profit. And my goal for this trade, honestly, is to exit the dollar amount that I had and then take whatever else I have in ETH and just move that to cold storage. That's kind of the way that I want to trade markets. If I'm going for swing trades the rest of this year, that's kind of my strategy, is like I just want to slowly chip away and add, when I can, add more ETH to my long-term holdings, because I want to come out of this bear market with more ETH than I came into it with. So that's my goal with that. What are you seeing on the charts right now? Like, we're having some positive movement here in the after hours for the markets. We have a lot of, it's kind of ho-hum for a lot of these companies that aren't reporting today. Yeah. But I want to take a look while you're talking. I'm going to pull up a few others that did report earnings.
For sure. Yeah, I just want to pull the DXY. Obviously, we talked about it yesterday. We talked about it earlier this week. Saw a bit of a pullback, right? And it's always days like today, CPI, FOMC, fucking PCE. I'm sure Friday it's going to be volatile for the dollar as well. We do need to come down a little bit if we look on the smaller times. Like, we're looking at the weekly right now. On the daily, you can see that we shot up. To me, I can't tell if this is, I would anticipate this would be a 5-wave move, but we need confirmation of this next wave up to see how far it goes, because I see, wave 1, wave 2, wave 3 right there. I would anticipate 1, 2, 3, 4, 5, and hopefully we break out of this channel. That'd be fucking ideal. But the question is, this is something that's contingent upon what Forex is doing, what, the markets are pricing in, what the data comes back. And we've gotten data that's been unfavorable to the dollar for, I don't know, man, since September of 2022. So keep an eye on this one. I think that we are in a good place where we could start seeing some further move to the upside. Obviously, we're seeing a little bit of retracement here. But if we hold the support at 100.845, which we currently are, we worked down to and we bounced off of it. I would anticipate maybe this is our wave 2. Now we're going into our wave 3, which still means that there is a few more waves up to the upside. So that would be my, best case scenario. Worst case scenario is this is some type of complex XYZ pattern to the point where we're going to retest these lows. But for right now, let's just anticipate that this corrective pattern's done. We're balancing, and we're going to hopefully see some some growth over the next few days, maybe next week. But again, main thing is just the the PCE data that comes out Friday. If it comes in lackluster, I think the dollar will be okay. If it comes in hot, dollar's going to kick ass. And then obviously if it comes in at expectation or below, as it has recently, because it seems like those what the people are betting on. And I don't know, man. It honestly feels like a fucking rigged game when you get some of this data back.
The fix is in, Kevin. The fix is in.
House always wins, right? Fucking that's what it feels like sometimes. But eventually, obviously, you can only hold bullshit up for so long before it starts to seep through your fingers. And I'm starting to think that we're starting to see the dollar react to the truth as opposed to the fantasy world that we've been living in for the past 8 months.
Okay. We're also seeing, we saw the VIX take a pretty sharp move down at the end of the day. It's just above 13. There's the volatility's dead. Everyone's happy.
That's a dangerous place to be.
The world.
That's a dangerous place to be, right? When the volatility is extremely low, and I like how you just said all is right with the world. I don't believe that one bit, especially after seeing Oppenheimer last night. But if we're in a place right now where I think that we are seeing some things that will increase volatility. I think one of the ones is that we just saw 3-month highs for U.S. oil futures, right? You saw Brent above 80. Like these are things that obviously PC. I don't know if the PC is gonna incorporate this going into Friday or if Powell's going to be looking at some of these energy prices as they're coming out. But this ain't necessarily a great look. Obviously, natural gas is a little bit higher than it was earlier in this year. It just seems like a lot of things are being accumulated. I'm not giving up on this energy shit. I think that's going to definitely bring some volatility coming in soon. But again, with what I'm seeing, and if there is some type of escalation to the point where oil is shooting up to $100 a barrel, that doesn't mean that there aren't other things in this market that could potentially be hurting before or after that could bring us even lower, or could be, putting us in a period of just absolute, descent. And I think that's where we are. You and I talk about this. How much higher could the markets go? Well, we're seeing Meta doing pretty good today, right? Post market. So
if you, once again, I'm going to harken back to Jim Cramer. If you had bought Meta, from now on, if Jim Cramer ever cries about a stock on TV and how it disappointed him, you back up, not financial advice, you back up the fucking Brinks truck, okay? If you had bought Meta from the second that he had cried about it on CNBC, you'd be up 210% since October. That's insane. Yeah. Like, the guy is a bottom signal. Repeated
bottom.
Like, it's crazy. He's the sloppiest bottom signal out there. This is the kind of stuff you don't get on Bloomberg, god damn it.
No, this is the truth. This, no fucking fluff. We just cut straight to the point. Fucking Jim fucked us. At least he fucked a lot of people in his club. I hope they're still getting their emails.
If you listen to him, like, I don't know do people really take his advice?
I really want to know
he's on
whose
TV,
nephew he is.
Are people like, you know what? He's on TV. I trust this Jim Cramer guy. And like, I see him on Twitter. He's out here like shilling tequila or wine or whatever liquor he's like selling now. It's like, I wouldn't drink that thing if it was free.
The fucking snake oil salesman. That's all he is. I'm not going to slander Jim anymore because at the end of the day, he is a pretty good metric if you don't really know which direction the market's going to go. You just take the road not traveled by Jim. But Meta is absolutely stupid right now, in my opinion. But again, look how much it's shot up, right? My main thing is these gaps. I think we're just filling things that, we saw, like obviously post-market, we're going to shoot up today. So we're going to create a gap. We're up 4.67%. It's at 312. It's going to be 313 very shortly. But it's like these things are just, we create them on one side and we film on the other. The only problem is on this side, we obviously created a bunch. We got another one right here today. So like all these are going to get filled at some point. But I just want to know what's going to be the point where it's just like, all right, now we know that there's so much more money below us that we can't push it up anymore. Is that just, retail's at a point where everyone realizes, okay, retail's the one who's been buying at the top? Have we offloaded a lot of our positions because we made a lot of money? Because that's what's happening with crypto. I mean, I'm almost positive that's why we're at 31K all the fucking time. We just keep hitting the supply zone. It's like, these idiots want to buy more. Let's keep selling it to them. And I mean that I'm talking as a whale. That's how my rationale would be. It's like, fuck it. If they're gonna keep buying it, why don't I just keep selling it? And to the point where I'm like, all right, I know they can't hold this up. It's gonna fall, so I'll just buy it back lower. I wonder if that's the same thing that's going on in the stock market, or if we're just absolutely that stupid and we are, just FOMOing into everything without any rationale of, okay, it's pumped so much already. There's no way it can keep pushing to the point where it's like, I mean, at the same time, we will also hit fucking all-time highs for so many stocks. It's such a wild place in this market. I hate it. I love it. But at the same time, it's like, I don't know, man. Have conviction, because if you're going back and forth on what you believe in, you're going to be wrong in both directions.
Yeah, man. It's
That was a sigh. That was a hell of a sigh, JWeb.
I like I've seen some shit, but this is like a level of fuckery and shenanigans that I don't really know how to wrap my head around.
I think they want it that way too, right?
They do. I think they want to get God. Like I think the market makers want to get you comfortable. They want to get you feeling all warm and fuzzy so you get complacent, or they want to get people thinking, okay, I can put my what little savings I have left into the markets because it's a surefire thing right now, because this is when people are buying the top, and then they're just gonna yank the rug out from under them.
See, dude, I have a conspiracy theory. It's so bad too, because I honestly think that this market obviously is pushing up because it's going to look good for an election year, right? Whoever goes against Biden, or even if Biden's even the candidate. But I wouldn't be surprised. Again, this goes back to that oil and everything. It's like in 2024, if we see some type of escalation, and it's like Russia pretty much being like, you fuck the ruble, fuck you, we're going to tank the US market. We're going to, pretty much make oil unattainable by anybody. We're going to shoot it up with $120 a barrel or something like that. And it just absolutely puts the US in turmoil. And then we just blame Russia. Like, that's my entire conspiracy theory of something that were to happen. It's just, there's no reason why this market is being propped up as much as it is, unless we're just talking about how much cash is still in circulation from all that stimulus that we got from fucking 2020. Right.
So speaking of oil for a second, I saw this tweet that was really interesting, and it was basically around how, the U.S. tapped the reserves a while ago and said that they had, when oil gets down to, this certain price, we'll replenish the reserves. And every time it started to get close to that price, OPEC Plus cut their output and sent the price back up. So, like, is that just going to be, another factor in oil going higher, and in turn inflation taking that pump back up that we were expecting? Like, is this how the rest of the world tries to really, rake the US over the coals, is with the price of oil and constantly controlling that and putting the US in an awful place where it just decimates our economy?
I honestly think it is what's going to happen. I just, when I see China and fucking Russia buying liquid natural gas, being major exporters of that, and then, obviously fucking Russia's, one of their major exports is oil. And the United States has one of the lowest petroleum I think it's the lowest their petroleum reserves are currently in history, or at least since the 1980s. I think it was at one point. We might even be lower than that point where we were. I have to double check on that. But it's like, are we setting ourselves up for fucking failure? And are we going to have someone, the perfect scapegoat, where everyone's just going to be like, yeah, fuck those guys, man, they started this war. And again, I'm not picking sides. I really don't care at this point. I just want to see how the markets are going to react to it. It's like, I don't know, man. I think inflation comes from obviously it's going to come from energy. I think that's one thing that's going to push it up. Already seeing groceries go up. But I think there's so many other things that the market has absolutely just created a scenario where now we have to worry about smaller banks. I don't care what Jerome Powell says about the smaller banks. We just saw PacWest absolutely get dissolved by Bank of California, right? And that was 3.5 months after fucking Silicon Valley Bank. Obviously there's so many other smaller banks that we have to keep an eye on. Rates are still extremely high. We also have to keep an eye on, consumer credit. I do believe that that's the thing that's going to absolutely tank everything, because if, we always say that the poor keep getting poorer, but it's like, if they don't have the money to hold up any aspect of the market, the middle class makes up 99% of the entire U.S. economy. People that are in that bracket of income, it's like, well, if they're not buying, if they're not doing anything, if they're in a place where they're fucked, they can't really do anything, then everything else is going to absolutely fall down like a house of cards. So right now it's such a weird place where everything's fucked. Inflation, I do think, is going to go up. But we also just have so many things going on in the background that are just equally just like combustible. So it's just like anything in the vicinity is just going to go up and fire once one thing gives. And I don't know what that one thing that's going to get first. It'll be really interesting to see, but I don't anticipate it being too far off in the distant future.
Yeah, I would just like this shit to like we're just going to be
last decade.
There's going to be a drop, and then we're just going to be crab walking sideways forever, and it's going to be very boring. But once again, having patience and having a longer term time horizon and having that revenue streams coming in is very important. So
we want
once again,
boring too. That's better than anticipating fucking further demise, right? Like obviously I don't want the market to crash, but I know it's going to. Like that's in my conviction, right? If it's crab walking and the market's already crashed, it's like, okay, this is where, having cash flow and just being diligent and patient and having more conviction that the market will come back at some point. It's where you make all your money. You're going to have such an opportunity to buy assets at such, dirt cheap prices.
Yeah. I mean, I still remain very bullish on crypto long term, and I have no desire to miss out on the next bull market. And I don't care if that's 2 years from now or 5 years from now, but I'm going to be here and I'm going to have more tokens than I do at this moment. So just do what's right for you. Yeah.
Look at Bitcoin, man. Fucking shot up 375 up off of that. So we are starting to see a bit of a bounce here, right? We starting to see that bounce with Ethereum. A bunch of other altcoins are up. Solana obviously kicking ass right now. It's up 8.72%. I don't think that we're done. I think that we're back in the supply zone again, man. I don't think we're going to break. We're completely oversold on the daily. So I think there's a good chance we could be pushing up in this range again for a little bit. Is that boring? Yes, absolutely. Because we want to know which direction the market's going to go. I don't know if the market's going to let you know just yet. At the same time, this is consolidating for Bitcoin dominance. It's going to keep pushing up too, right? We're at 49.94 and we're finding some support in this range, right? This clearly is showing that we're not losing this as of yet. And, this could be a 3-wave correction. We go 1, 2, 3 right there. And now we're consolidating, waiting for the next push to the upside. And I do think that we have more room to the upside because look at the daily. The daily has plenty of room to the upside on the stochastic RSI. And the weekly can stay overbought. Monthly can stay overbought. It really depends on how Bitcoin is reacting to other things in the market. If we look at, I just want to pull up Solana too, because, Solana is one that is seeing some nice gains today. But, I kind of said this, what it's been doing. It's this this major pattern. Like we're still within a bear market structure. We got a major 5-wave down. We got a small 3-wave up, another 5 waves down. And up until we got to the point where we're at $32, it's another 3 waves up. 1, 2, 3. Now we're in 5 waves down to the 5-wave move to the downside. And sure, we're up 8.46% today. But within this, you could also say this is wave 1, wave 2, wave 3, wave 4, wave 5. And I know this is inception shit here, but it's like, a lot of these structures are still telling me that there's a lot more room to the downside. It doesn't matter if they're pushing up a little bit here or there today. I think that some are definitely in this descent, altcoins more than obviously Bitcoin. But once Bitcoin turns, then everything's just going to follow with it. That's the thing to keep in mind. Obviously, we're just in this place where, short term, maybe the markets go up a little bit, but I still think macro, if we're looking September, October, November, December, I don't think we're in the same structure that we currently are in. I think we're going to have a lot more clarity in getting out of some of these supply zones where people are absolutely distributing this to retail investors. I think, and again, this might just be me being optimistic as a bear that we're going to get some clarity in which direction the market's going to move and maybe we can make some money. I think that a lot of people who are maybe preemptively or, too early getting into the shorts are getting wrecked. And then we've seen that across the board. We saw that with XRP. But I do think that obviously monitoring this stuff and waiting for Bitcoin to make a decision, which I think will break above 31K, that's going to tell you, okay, we're close to the end of this move. And then it's all downhill from here. And I'm not trying to say that in a bearish way or, be negative, but it's like, it's right in front of us. I honestly, when I see these structures, I'm like, okay, as a sane, rational human being who trusts technical analysis and mistrusts people telling me exactly what the market's going to do, I think this is the way. So that's all I got to say.
I think you should change your Twitter name to the Optimistic Bear. I think that would be.
It's not sexy enough.
A good one. The Optimistic Bear, and then your profile picture. Like you can find pictures out there of bears like sitting by water, like looking like they're meditating. I think that would be a great Twitter persona for you to take on, Kev.
I need bastard in my tag in my username. Put bastard or something like that. Because I know
okay,
I am. Then. I'm too mean to be an optimistic bear when it comes to sifting through all this bullshit that they're feeding us.
Fair enough. Okay, that will wrap it up for today. Appreciate everybody for watching. Once again, if you have not yet, hit those buttons down below for us. A like, dropping a comment, subscribing to our channel, sharing us out on social media. All of those things help us tremendously. We'll be back tomorrow at a regular time, I believe, 3 p.m. Eastern. Winnie the Pooh wearing an Optimism t-shirt says Mr. House. Love that. That's definitely the way to go.
Let's do it.
Yep. So we'll be back tomorrow at our normal time, 3 Eastern. We'll be discussing the latest in the markets, what we see from GDP, the other economic data, getting ready for the PCE release on Friday morning. It hasn't been as volatile of a week as I thought initially. It could still get there, though. That's the dangerous part. It could still get there. And I still feel good about being in my ETH trade at the moment. I still see room to the upside here. But like I said, I'm not getting greedy. I got my place in mind where I'm going to exit. And I'll be happy if I can book a little win on this one. And I think, I don't know. I don't want to jinx myself. I'll just leave it at that. So thank you everybody for watching. Have an awesome day, and we will see you next time.
Take care, everyone.